Crypto's most friendly Fed chair just got confirmed.
And 6% inflation just landed on his desk.
That's a coincidence?
Is it?
Two idiots talking crypto.
Okay. 5 plays in 1 week. DTCC enlists Chainlink. Fidelity ships a Moody's rated tokenized fund, institutional grade. JP Morgan ships its second. 21 Shares ships a hyperliquid ETF on day 1. The pipes are built. All we needed was the guy who won't burn it down.
Okay. Let me push back on the framing.
Here we go.
JP Morgan's tokenized fund is for stablecoin issuers and corporate treasuries. DTCC's deal moves treasury bonds between primary dealers, the VIP banks that trade directly with the Fed. Fidelity's fund minimum probably starts higher than your entire portfolio. These aren't on-ramps. They're plumbing.
So you're saying the biggest institutional adoption week in crypto history is bearish?
I'm saying it's not for you. They built faster pipes to move their money. Your wallet didn't get any new on-ramps this week. Same Coinbase, same Kraken, same fees.
The rails are shared.
Every protocol JP Morgan chooses to whitelist benefits, the KYC'd, compliance-friendly ones. Aave's permissioned pools, Maple Finance, compound on regulated chains. The truly decentralized stuff, Uniswap, Curve, anything anonymous, JP Morgan won't touch. So when you say rails are shared, you mean shared with protocols willing to sit on JP Morgan's compliance shelf. Different sentence.
But the crowd. Hype trending number 2. BNB up 3.9% weekly. Funding rates positive. Fear and greed 31. That's the contrarian buy signal.
Funding rates positive means everyone's leveraged long. Your job, retail investor listening to this, is to not be the last one in.
You can't predict what Warsh will.
I don't have to predict. 6% PPI predicts for him. The Fed has one job priority when inflation runs this hot. Kill it. Hawk, dove, crypto friend, crypto skeptic. Doesn't matter. You think Warsh ignores 6% inflation and starts tweeting about blockchain modernization?
History lesson. Powell preferred normalized rates. COVID hit. He cut to 0. Because when the economy panics, the Fed makes borrowing nearly free to stop the freefall. Bernanke preferred not to print trillions. Subprime hit, he printed trillions. Same logic, save the system. New chairs reveal what they actually believe under pressure.
That's a real point.
You hear that? TAC admitted I have a point.
1. Calm down.
So when 6% PPI hits Warsh and he genuinely believes tokenized treasuries are monetary modernization, what does he do? Hikes anyway?
Yes. Then he writes a Hoover paper about how tokenized treasuries should have been ready for this. Different track than Tick thinks. These guys can love crypto and crush risk assets in the same quarter.
From a fundamentals? Wait, you haven't said it yet.
I'm pacing myself.
Callback. Episode 4 prediction is live. Warsh confirmed May 14th. Clock started. 2 weeks to 85. 2 tranches. Pyramidum into the catalyst.
You're pyramiding $20 at a time.
It's proportional.
Show me your wallet.
I'm not answering that on.
Right.
6 times in 2 years, BTC ran more than 7.7% in 14 days.
Right. And 98 times it didn't. You're picking a 6% probability and calling it the base case.
Lord have mercy.
One of us is going to be insufferable on May 29th.
1. President of the United States is buying crypto stocks while signing crypto laws.
The phrase for the president's portfolio benefits from laws he signs is regulatory capture. Who benefits? His portfolio.
Or he believes in the asset class.
Sure. More charitable read.
You hear that? Tax being charitable.
4 more headlines.
2. AI just recovered $400,000 from a lost BTC wallet. Future is here.
Everybody's celebrating the 400K. Nobody's asking the obvious question.
Which is?
What happens when someone points that capability at your wallet? The threat model scales with the next generation of compute.
You can't brute force a properly generated seed phrase.
You can absolutely brute force a poorly generated one. Which is what this story is. A wallet with a weak password space. And there are millions of those out there.
Okay, that one's fair.
Clarity Act advanced. The bill itself is simple. Finally tells the industry which crypto is the SEC's problem and which is the CFTC's. Most projects want to be commodities. The amendments are the actual story. DeFi protocol governance carve-outs. lobbyist exceptions that let banks sidestep the DeFi rules. Trump family crypto disclosure, Epstein estate references. Banks lobbying hard against the DeFi sections. Because if DeFi gets the same rules as banks, banks lose their monopoly on lending.
Bill is moving. That's what matters. Amendments are politics.
The direction can be forward, and the destination can be a different bill. Politics are the bill. If banks strip the DeFi sections, the law you wanted doesn't exist anymore.
You're worried because you're predisposed to worry.
I'm noting amendments with material implications for DeFi protocol governance, the part everyone was waiting for.
Forward is forward.
Into a different bill. Yes.
4. First ever DeFi perpetuals ETF. Day 1. The precedent is the story.
1.2 million on day 1. That's roughly a studio apartment in Manhattan.
First day. The precedent is.
I'm not dismissing the precedent. I'm noting the scale. BlackRock's IBIT did $1 billion on day 1. Solana ETFs averaged 45 million. Hyperliquid did the studio apartment.
Smaller universe. Earlier cycle.
The narrative is great. The flows are a studio.
Remarkable studio. 5. 3 years late. Several billion in exploits late, but shipped.
Good. Overdue.
We agree?
On the fix. Not on what took them so long.
Real talk for everyone watching. If your wallet still shows raw hex code when you sign a transaction, update it today. That's how billions got drained. You think you're swapping Ethereum for USDC, you're actually authorizing someone to empty your wallet.
Threat model didn't catch up to wallet architecture until billions were drained. Incident-driven engineering at scale needs liability or losses. Neither hit until 2024.
Those are the same sentence.
Sure, Cope Corner.
Get it over with.
Episode 2, April 29th. You said BTC hits 85 by May 15th. May 15th came, BTC was at 87.86. You missed by $4,214.
Direction was right. BTC rallied 18% in the window. Thesis was right. Timing was tight.
Off by $4,000, and you're calling it tight.
My episode 4 prediction has the same target with a better catalyst.
You didn't update the thesis. You moved the goalposts.
I added a catalyst.
You added a new deadline for the same target. That's not analysis. That's a publicist.
One bad timing call doesn't kill a framework.
It's not 1. 3 resolved. 1 win. 2 losses. 33%. The framework has a track record now.
I called SOL at 9. You had your spreadsheets, your fundamentals, your framework. I was buying SOL at 9 while you were writing its obituary.
1 data point doesn't validate a framework.
1 data point? 9 to 260. That's a career.
Survivorship bias. For every SOL, 50 dead chains you also would have bought.
Name them.
Moving on.
You hear that? Fundamentals guy is moving on.
Deeper problem isn't the miss, it's the defense. Thesis was right, execution was wrong. Same defense you used after Luna. April 2022. Word for word.
Luna was Duco 1. The concept.
1 bad actor and $40 billion.
Moving on.
At some point, being wrong with conviction stops being a framework. It becomes a personality.
My personality is going to be insufferable when BTC hits 85 by May 28th.
If.
When? Here's my call. ETFs plus tokenized fund AUM. 5 billion of fresh institutional money in Warsh's first 60 days. Floodgates.
5 billion across ETFs and tokenized funds in 60 days.
5 billion.
Mine. Warsh's first statement frames inflation as priority 1, and Bitcoin closes below 76 within 7 days of that statement.
2-part. You're hedging.
Specified, not hedged. 1 prediction. Measurable condition. Measurable consequence.
ETF flows speak louder than dot plots.
Data doesn't speak. It accumulates. Quietly.
Team tick, 5 billion, 60 days. Floodgates.
Team TAC. Priority 1. 76K hawk in a pro crypto cardigan.
2 idiots talking crypto. 2 idiots talking about crypto. The TICTAC Show. Subscribe and leave a like, you know. Ding that bell for more wild guesses. Two idiots talking crypto. The TICTAC Show. Don't forget to hit subscribe, a like, and that bell. Let's thrive for more market madness every time. We're just two idiots talking crypto. Yeah, that's the TICTAC Show. So smash that subscribe button, give us a thumbs up for good fun, and ring the bell, don't miss a thing. Yeehaw!